webinar, which is not really our webinar, but today we are discussing the economic data release on the Eurozone's Flash Manufacturing PMI, which is going to be released in less than 15 minutes. So, as usually, I'm going to start with the fundamentals with this event, and then Alexander will continue by commenting on the negative impact, and then Thomas will finish up by commenting on the positive impact, and also he will talk about the market reaction to this event. So, but let us maybe first have a look at this reading, what happened with it over the last couple of months. And yes, you already know that manufacturing PMI is a reading that gives us a sign on what is happening with the economy, in this case, with the Eurozone's economy. So, I'll just put one chart on the whiteboard where you can see how this reading has been changing over the last month, actually over the last 2 years. And we do see that since April 2013, the reading has been gradually increasing, meaning that the overall economic health of the Eurozone is improving.
Yes.
But so the manufacturing sector surged to a 31-month high in December, reaching 52.7 and beating a forecast of 51.9. However, if we look at the services sector, then it declined to 51 from 51.2 in November. Nevertheless, the improvement in the manufacturing sector puts recovery back on the table despite the slow expansion rate. I also should add that this reading is highly impacted by the PMIs of the EU's most powerful economies, such as France and Germany. So let's quickly discuss that. And if we talk about Germany, then its manufacturing sector continued to advance in December, rising to 54.2 points from 52.7 in November, while the service sector again contracted to 54 points from 55.7 in the previous month. When we look at France, then its service sectors continued to disappoint as the services PMI slipped down to 47.4 points from 48 in the previous month, and that was actually the 22nd consecutive month when the reading was below 15 mark. But talking about the latest economic data releases we have had, just about 20 minutes ago, data on German manufacturing PMI came out and was at 56.3, beating the estimate of 54.7. So this might mean that we will have a positive reading on the Eurozone's PMI. However, again, if we look at the services sector, then services PMI missed the estimate of 54.1 and was at 53.6 this month. But getting back to what we should discuss now, let us have a look at the forecast. So as usually, I will put on the whiteboard the top 10 forecasts from Bloomberg survey and also a summary of that. So we do see that the consensus estimate for this month is at 53 points, meaning that we should expect a slight improvement in the Eurozone's manufacturing sector. If we look at the range, then it's not that wide either. We have the lowest estimate at 50.6 and the highest at 53.6. And if we look at the top 10 forecasts gathered by Bloomberg, then we can rather conclude that economists are quite positive on this event, and they don't see the reading going lower than 52.4. Yes, what else I could add? So we see that economists think that this event will show positive results We should also have a look at the fundamental analysis concept to see what Dukascopy community members think about this event and how they see this event impacting Euro-USD currency pair. And here we can see that our community members are positive, see this event having a positive impact on the pair, with almost 63% voting for bullish impact. So that was all from my side, and now I would like to invite Alexander to continue with the technical part and negative impact. So welcome, Alexander.
Thank you, Mike. Good afternoon, everyone. So today we are discussing Eurozone manufacturing data, and as Mike already said, manufacturing data from Europe's two largest economies, Germany and France, is already out, and actually both readings surprised markets to the upside. So diminishing hopes that we'll see some worse than expected data from Eurozone. However, we also had a release of Eurozone current account data, services PMI, and composite PMI. So we should not exclude the downside move in Euro-USD. As I already said, both Germany and France manufacturing came stronger than expected, sending Euro-USD high above 136 level. To be more precise, the pair has reached a high of 136.42, just a couple of pips below the weekly resistance. And when having a look at 1 minute chart, we can see a possible negative surprise trading strategy, which is based on Euro-USD, as you already get. So the potential entrance point is at the market price, which is currently fluctuating around 4-hour resistance at 136.31. The potential take profit can be placed at 136.03, so just 3 pips above a strong psychological level, as well as weekly resistance. As to the stop loss, it is recommended to place just slightly above the recent high and the daily resistance at 136.45. So to be more precise, that will be 13 pips until the stop loss and around 25 pips to the take profit. And that could be a little bit optimistic, actually. So the next key level for Euro-USD is located at 136.07, just 4 pips above the take profit. As usual, we are having a look at market sentiment, and we see that 57% of traders are holding short positions on the pair. Meanwhile, the shared currency is sold in 55% of all cases across the board, while the greenback is bought in slight majority of all cases. And as we assume that the pair will depreciate on the back of weaker than expected data from Eurozone, from Europe, then it's worth paying attention at pending orders, and as you can see, vast majority of them in the 50 pips range and 100 pips range are placed to sell the pair, meaning that they are ready to provide some additional support for downside movement. And speaking about market sentiment provided by other market participants, we are seeing practically this similar situation as we had yesterday, as one and daily FX traders are universal and but selling the pair in majority of cases, while Saxo Bank traders are holding long positions in 72% of open positions are long. And finally, let's have a look at technical indicators, and as you can see, vast majority of them are neutral. However, indicators on the daily chart are sending sell signals, suggesting that in the longer term, the pair is expected to depreciate. So we still have some 5 minutes before the news release, and once again, the potential negative surprise trading strategy is with the entrance point at the market price at 136.33. The potential stop loss could be placed at daily resistance at 136.45, while the potential take profit can be placed just slightly above 136 level. And I guess that will be all from my side, and I'm giving the floor to Thomas, who will discuss the positive surprise trading strategy, as well as he will have a look at the market reaction. So welcome, Thomas.
Hi everyone, thank you, Alexander. So Yeah, I'll be talking. Oh my God, there's a bunch of stuff which I don't need. Don't whiteboard. So yeah, as Alexander told, I'll be talking about possible positive trading strategy, and what you're seeing right now. Let me make it somehow more visible. What you're seeing now is Euro Swiss franc 1 minute chart, and I will explain why I chose Euro Swiss franc. First of all, due to the current market sentiment, which is strongly bullish, 72% of traders expect appreciation of the pair. Also, 66% of pending orders in 50 pips range from around the current market price is set to go long, and also Swiss franc is sold in 70% of the cases. In addition to this, Saxo Bank clients, one of the other market participants, all its clients are 72% of them are long on the pair as well. So let me just do this. So the strategy itself is based on the idea that you buy at the market, take profit is set at the daily S1 at 1.2341, which is located right over here, and stop loss is, let's say, it could be set in two of the cases. First of all, if the pair remains slightly above it, then on daily S2, which you can see right over here at 1.23245, and I highlighted yellow as it is a possible one. However, let's say a certain stop loss could be at the 200-day simple moving average, which you can see have kept the pair supported for the past 1.5 hour. Oh, I'm sorry, that was actually a 30-minute chart, what you were seeing. So as you can see, the 200-day simple moving average kept the pair supported for quite some time. As I said, for almost 1.5 hours, actually. Let's see, actually a little bit more, 3.5 hours. So that's definitely a certain stop loss level for the pair. And if the pair actually at that point when you enter the position will be trading at above the daily S2, it definitely could be stop loss could be set there. So we're 1 minute before the release of the data. So just to recap, enter the market at the market price, take profit at the daily S1 at 1.2340, and stop loss at the moment is definitely at the 200-day simple moving average. For those who expect it a little bit too high, could go with the daily low, daily S3 around 1.2317, 16 pips right over here. So we are few seconds away from the release of the data. Let's see what it brings. And we can see that there's no reaction yet, so we are not seeing any increased volatility or anything like that. Okay, so we can see Flash Manufacturing came out a little better than expected. And current account, we're still waiting for the data. So Flash Manufacturing PMI just slightly above the expectations. Flash Services PMI the same, just slightly above the expectations. And we can see that there is pretty much no reaction in the market to this data. Let's say the positive, the initial reaction was just only 3 pips, right? And overall, the pair is remaining in 3 pip range after the release of the data. So let's wait maybe a minute or two for the current account data. Maybe that will manage to fuel some trading activities, because at the moment it looks pretty grim. Okay, so taking into account this reaction, I guess it would be safe to assume that it will be really hard for the current account data, which also came out better than expected, it seems, but at 23.5 billion, if I'm not mistaken. However, as we can see, there's no absolutely reaction in the market. So, of course, very hard to comment on that now, but the only reasonable explanation is that, this data coming out was already priced in and priced in pretty accurately by the majority of the traders. Therefore, we're not even seeing any major moves in the market. So, that being said, I guess that will be all from my side, and I give floor back to Maya to wrap it up.
Okay, thanks a lot, guys. So yes, we see the data came out, and it was better than expected. But so far we didn't see that much of market reaction. We'll see if there will be any changes in the next few minutes. But for now, thank you, dear viewers. We do hope that we helped you, and you're welcome to join our daily research webinar at 12 GMT. So see you later. Bye.